The S&P has revised the Bahamas outlook from stable to negative and says it could drop even lower than that if the government doesn't put forth a medium-term plan to address the higher deficits and to stem the rise in government debt to GDP. The report released today also concluded that continued deterioration in the Bahamas' fiscal position during the fiscal year ended June 2012 reflects cost overruns in capital expenditures and subdued revenue growth. To talk about what all of this means and how the government is reacting, we're joined by State Finance Minister Michael Halkitis. Good evening to you, Minister. Thanks for joining us tonight.
Good evening. Thank you for having me.
All right. Well, you heard the summary of the report. How do you react to the conclusion that the government's fiscal profile has continued to weaken, and how do you begin to turn things around?
I must say, Keishla, that this, while it is an unfortunate development, it's not unexpected. We knew that the cost overruns related to the capital works were having an effect on our deficit, and S&P affirms that. And it affected the budget as at the end of June 2012, and it's going to affect this budget. So we expected that outcome. What is good is that the ratings have been affirmed, and as you said, S&P said that the cost overruns as it relates to the capital works and the subdued revenue performance are what is contributing to this revision from stable to negative. And so what we have to do is that we have to address the issue of the underperformance of the revenue, which we are doing. We have to address the issue of growing the economy, which we are doing. We are very aggressively pursuing foreign direct investment and some other initiatives to get the economy growing. And what we have to do is we have to contain expenditure, and we are very aggressively addressing that. So we think there's a three-pronged approach: grow the economy, grow the revenue, control the expenditure, and we believe that that is the right formula to get us back on the right track.
Now, the road improvement project, as you mentioned, not surprisingly included in this report along with its cost overruns. The works are blamed for pushing the general government deficit to an estimated 7% of GDP, and it's expected that the overruns associated with capital projects won't moderate until the following fiscal year, ending June 2014, when the deficit is expected to fall to 4.4% of GDP. Is that your projection as well?
That is our projection. Cost overruns related to the roadworks are being felt in this budget, as well as some other commitments by the government that are being brought over into this budget, and we will feel those, and we are confident that with the conclusion of the capital works, we will get back to a more normal position beginning in fiscal year 2013-2014, and we're hopeful that combined with growth in the economy and bringing into fruition our efforts in terms of taxation reform and revenue administration, as well as our cost containment, that we will be back on the right track beginning in 2013-2014, and we will begin to trend in the right direction.
Now, politics wasn't left out of the report. A May 7th election saw a change in government and a new administration with its own plans. How do you go on in the direction dictated by the Christie agenda and keep the deficit down?
Well, as the report rightly said, the elections were May 7th, and about 3 weeks later we had to present a budget to Parliament. So within that short period of time, there's very, very little room to make any significant changes to the budget. And so our implementation of our programs would be limited in this first 6 months and maybe even this first fiscal year, but we fully expect to be able to make the adjustments and fully implement our program and fully implement our plan, particularly as it relates to tax reform, procurement reform in terms of how government money is spent, and modernizing of the way we collect our revenue. In the very, very short term, it's difficult to do, but as we move on, we fully expect to be very successful in those areas.
All right. Thank you very much, State Finance Minister Michael Halkitis.